Okay, good afternoon. We're about to start our monthly webinar. Give me a few more people a chance to log in before we get started. Hope you guys can hear me loud and clear. My name is Sean van den Berg. I head up client education at PhD Online. Welcome to our session today on currency futures. Obviously, there's been a lot of interest in this. I see by the registrations, a lot of people have registered. So obviously, there is a need for this. I've called this an introduction, as there is a lot of information. I will be having a follow-up webinar next month, with a bit more intermediate to advanced. But welcome to this session. Let's get started. Let me show you the agenda for today. Basically, it's just an introduction. So we're going to discuss what are currency futures, where are these things traded, how do you trade currency futures, what are the pros and cons. Obviously, the risks involved being a future, there's the risks being a geared product. And then I just want to highlight some of the tools that a person would use trading currency futures. So as with every other webinar we have, remember this presentation is being recorded. So those of you who are attending, you will be getting this presentation afterwards in the PowerPoint presentation, as well as the recording. So any questions you guys have, please send them through. I'll try and answer them near the end of the presentation if I don't cover those questions within the presentation. Just remember, as I say, the presentation will be sent to you guys, all those that are attending this presentation. Okay, so let's get started. As I say, it's a leverage product, but there are obviously some people that are new to this business, to derivatives. So that's why I've broken down into two sections, two parts. This will be the introduction section this month. So it's interesting talking to our head of currency trading this morning about currency futures. You're telling me obviously it's a growing market. If you look at last year, the average trade per month was about 20 billion. And so for this year, halfway through the year, it's increased to about 36 billion rand per month. So obviously it's a big market and it's growing. It's interesting to note also that he talks about big tickets. These are the big trades coming through, on average about $10 million at a time. So obviously it's a lot of institutions trading, and we can see in the second part of the slide, we says there's about 35 market players out there. Obviously the big four banks are out there. They're the market makers. So you got the Rand Merchant Bank, Standard Bank, and Absa being very, very predominant in the currency futures market. So they account about 70% of trade. So the banks account for most of the trade on currency futures. And then obviously there are the five institutions, be it the Sanlams and the insurance companies and pension funds and those kind of guys. But also interesting to note there are 26 different broking firms offering currency futures to their client. But still it's only 30% of the trade, 30% of the market. But it's growing, and obviously more interest and more people learn about the product, the better. Okay. So let's move forward. Let's talk about currency futures. They've been around for about 6 years now. The JSE introduced them back in 2007. Similar to a single stock futures contract. It's a standardized contract, so everybody trades the same thing. And we trade it through the JSE trading platform. The main thing is obviously allows a trader to have exposure to foreign currency movements without affecting your offshore allowance. You know, you're allowed to take out 4 million and then R1 million every year. So you don't want to affect that. This doesn't affect that one bit, but you can still benefit from the currency movements, especially if you want to go overseas on holiday, or you want to hedge yourself against, you've got a gold exposure. This is what you want to use it for. But we'll talk more about the usage just now. Same like single stock futures, you can take advantage of rising prices and falling prices by going long and short. So the same terminology being used here. Okay. Just gets a bit different when we talk about trading single stock futures. You're trading one share. With currency futures, it gets a bit more complicated in the sense that you either buying something and selling something automatically. So either you're buying the dollar and selling the rand, or you're buying the rand and selling the dollar. So we talk about currency pairs. So always remember you're doing one of the two. You're either buying one currency and selling the other, or vice versa. So that's where it does get a bit more complicated, or tricky rather. Be aware of that kind of stuff. Again, like single stock futures, being a future, it's a geared product, so you don't have to put down full value to have exposure. You put down an initial margin, a deposit, which is roughly between 10 and 20%. Okay, so very similar to, as I say, single stock futures, but obviously now we're trading currency futures. Okay, so let's talk about some of the stuff involved and more of the details. As I mentioned, it's a single stock future, so it also expires every quarter. So with single stock futures, we're talking about the third Thursday of every month. Single stock currency futures have expired on the third Monday of every quarter. So it's March, June, September, and December. So at the moment, the guys are trading September contracts, and the expiry date is 16th, Monday the 16th of September. So there's no rollover cost, but we do obviously have a rollover. So we just basically, you roll over to the next contract, and obviously there's brokerage involved. Currency futures are very, very cheap. It costs you 18 Rand per contract to open up the one leg, and obviously 18 Rand to close the other side of the leg. Margin, as I say, it's a leveraged product, so you put down an initial margin, an initial deposit, but it works out what we call 2 times the JSE requirement. We'll break down a bit further just now. We talk about initial margin, and we talk about a variation margin, and we talk about a margin, obviously, for the daily movement. The contract size, this is where it's important. As I say, remember, it's a standardized contract. So every contract, one contract exposes you to 1,000 of the underlying. So it did $1,000, 1,000 euros, or 1,000 pounds. So remember, it's 1,000. So it's a standardized contract. Being a geared product, obviously 1 cent movement is equal to 10 Rand profit, or loss on the contract. So you'll see just now we talk about 4 decimal places. We talk about 3 cents movement. I always say about 4 cents movement to break even on costs. Remember, 18 Rand and 18 Rand is 36. You need a 2 Rand, 20 Rand on the open, or 2 points rather, and 2 points on the close to break even on costs. So again, remember, it's a geared product. So if you're putting down 10% margin, you're geared 10 times. So remember, the market moves against you. 1 cent is 10 Rand, and vice versa, obviously 10 Rand gearing. One thing you must understand about currency futures is that these things are settled in Rands always. Okay, and they're always quoted to 4 decimal places. As I say, they're either closed or rolled over. So you need to make a decision. You're going to close it out, or you're going to the default position will be automatically rolled over to the next contract. So who trades currency futures? Obviously, various groups of people. I'm using an example here of a fund manager. I use an example of Sean Leroux. He heads up a fund management side of PSG Asset Management. So where he might be hedging his offshore exposure. Can you remember a few weeks ago when the Rand was trading at 10 Rand 30 to the dollar, and obviously it was very overvalued. They had to pull back. So in that situation, you'd be selling a dollar contract to hedge against a strengthening Rand contract. Sorry, I've got a glitch here. I should say USD ZAR. Or a farmer that is importing machinery from France. You might want to buy some euro contracts to hedge against a weakening euro exchange rate. Or investor that wants to hedge himself with Sasol. You think the oil price is going to fall out of bed, you want to hedge your position there. But obviously, you're either going to be a hedger or a speculator. Those are the 2 main groups that we talk about when we talk about currency futures. So a speculator is someone who wants to take advantage of a price movement. You anticipate the rand is going to get stronger or weaker. You want to benefit from that move. So those are the kind of people that trade currency futures. Okay. What do we trade? We trade about there's 6 or 7 different currency pairs. So either we trade the dollar, the euro, the pound, or the Aussie dollar, the yen, the Canadian dollar, or the Swiss franc. Those are the currencies we trade, but all against the rand. Remember, these things are always settled in rand, and those are the currency pairs we trade. So it's having a view on the rand relative to the dollar, having a view on the rand relative to the euro, that kind of stuff. In next month's follow-up session, we'll talk more about synthetic pairs. That's obviously the dollar against the euro, and then obviously converting it back. A bit more complicated, but that's for another lesson. Basically, you choose to trade either a long or short, like we do single stock futures. So you'd buy or sell a specific currency pair. For example, you think the dollar is going to strengthen relative to the rand, you would go long or buy the USD dollar contract. In other words, you're doing the opposite. You'd be buying dollars and selling the rand. So always remember, it's a currency pair. That's what I want to stress for this presentation today, currency pair. So those of you that are still logging on and we're coming in now, just remember this presentation will be sent out to you guys. Any questions you have, please send them along. I'll try and answer the questions near the end if I don't cover it in the presentation. Okay, so just bear with me. I see there's some questions coming through already. Neil, I'll be with you just now. So just bear with me. I'll answer some of those questions just now. Let me just get through most of this presentation. I think this presentation will answer most of your questions. Alternatively, you might think the euro is overvalued and should weaken. You're short or sell the US dollar contract. In other words, you'll be buying the rand on the other leg. Okay. So again, on the stress, it's currency pairs. You're either buying one and selling the other, and vice versa. Okay. So let's move forward. And let's talk more about how do these things work and how do the actual trading takes place as such. Okay. So before you can even consider currency futures, obviously you need to open up a currency futures account. You need to understand that there's initial margin requirement. As I say, 2 times the JSE margin. The JSE might stipulate that in rand terms, say for example 340 rand. So obviously you need to put on double that, so to be 680. So 50% of that amount goes to initial margin. That's the initial margin to open up the contract. And the other one, other 50% goes to what we call a retained margin. Obviously, it's a buffer that what we call mark-to-market movements on a daily basis. So funds will go in and out your account on a daily basis. That's where if the market goes against you, obviously that buffer, that's where that other funds come from. Okay. So let's talk about market-to-market. This is a very important concept to understand. People don't understand that compared to like shares, you might have a paper profit. With single stock futures and currency futures, it's on a daily basis. Your portfolio gets reevaluated on every single open position, obviously. So if the market goes against you, any realized profits or losses, obviously the money will be taken out of your account if there's losses, and obviously any profits will be put into your account. So that's where it gets a bit more complex for most people. Just understand this is a geared product. It means you trade on volume, you are borrowing funds, and that mission margin gets ring-fenced. You always have to keep it at that margin. If the market goes against you, you have to top up. That's where the variation margin comes in. So remember, leverage or geared product, it's a double-edged sword. You can lead to either large gains or large losses. Obviously, it depends on which way the market's going. So, the concept of being wiped out is not just a theoretical possibility, but it's a real one. So I always joke, and it's very true to always remember this, that these things are be a geared product. You can lose your wife, the car, and the house, not necessarily in that order. So it's very important to manage risk. Okay. So how does trading take place? You trade through the JSE trading platform. So remember, it's a regulated product. Being regulated, obviously there's recourse if something goes wrong, be it PSG hasn't got the funds or the client, but there's always this more safety, call it that way, compared to a lot of people like to trade Forex, be it opening up an account on the internet, and these guys have based in Cyprus, and we saw it happen in Cyprus a few months ago. So obviously with currency futures being a regulated product, a bit more safe and secure, gives you that peace of mind. So the only disadvantage, obviously, compared to Forex is that Forex is clear 24 hours. Yeah, you're trading JSE hours. So it's between 9 and 5 o'clock. So any margin payments, mark-to-market, cash settlements, all that kind of stuff is automatically done through a clearinghouse and guaranteed by the JSE. So that gives you that peace of mind. So remember, mark-to-market is traded at the end of the day, and basically the JSE takes the last 10 minutes of trading from 10 to 5 to 5 o'clock, and then they average out that price. So where you opened and where the market closed that day, that's what we talk market-to-market. Is the market going in your favor or the market going against you? So, and that's where people don't understand the difference. Okay, and that's where the margin calls and things like that. So what is the order book? This is where everything gets lumped together in one place at the JSE, what they call the centralized order book. And all the orders are arranged by time, also price and time priority. So first come, first serve, and obviously the best price and things like that. Similar to shares and single stock futures, the bids are the buyers and the offers are the sellers. So a buyer that's prepared to pay the most, pay a higher price, will be at the top of the bid side, and whereas the seller that's willing to sell at a lower price will be the top of the offer side. You'll see a slide just now when we show the order book, what it looks like. So if you want to buy, obviously enter a specific price. Remember, it's always in rands. You'll be buying right at the market. So you get a choice. Either you're buying at the market or you can stipulate a price. So if you want to get the market right now, obviously you're buying at best. Okay. And same with selling. If you want to sell, the best thing to do is execute straight away where the market is trading right now. Okay. Guys, it's just a quick screen dump. What the bids and offers would look like. Obviously, it's a bit of an old slide, but you'll get the idea behind it. This is when the rand was still trading near 8.50 opposed to close to 10 rand now. So on the one side, let me just get my little highlight here. On the one side, obviously, you got your bids. On the other side, you got your offers. And obviously, we need to match. So you can see the bids are the buyers and the offers are the sellers. At the moment, there's a bit of a spread here. But you can see the quantity. Remember, these are contracts now. So there's 1,000 contracts. Now, each contract is worth 1,000 of the underlying. So we've got 1,000. That's a big market maker, a big player coming in there. And then on the other side, obviously, you've got 100 contracts there. This is PHU. I remember this is PHU's book. So obviously, you want to trade right now. This guy has to wait. You can see it's way off the market. If he wants to trade right now, he can take out the offer at 8.48. So obviously, it's 8 cents up higher, 8.2 cents higher than he wants it right now. Okay, that gives you a quick quiz of what it would look like. So let's talk about the difference between spot price and futures price. And I'm going to try and keep it as low level as possible. I don't want to go into too much detail because people can get snowed under with the numbers. Just remember that the market is getting more liquid and things like that. So don't have to worry about all calculating these numbers. Market's quite liquid, and market makers are making the market for us. But the big difference is obviously between the spot price and the futures price is what we call forward points. Now, forward points is basically a function of the interest rate differential between two countries' interest rates as such. For example, America and South Africa. But the idea of the forward points, it offsets or neutralizes the difference between the two interest rates as such. It's basically the idea is there to prevent any risk-free arbitrage opportunities and things like that. So the more trades and things like that, and the gap narrows, the better. Okay. So the best way to explain that is a little graph here. In this situation here, the forward points was 13 cents at the start of the futures contract, and obviously that gap would narrow and moves towards zero by the futures closeout. Okay. So that should be, by the futures closeout, they should have the same value. Okay. So that's the main difference between like with single stock futures, we buy the underlying equity share and it gets converted over to a futures the next day. Obviously, the difference in price, that's the futures price with interest and all that kind of stuff. Same thing here. So instead of being interest, we talk about forward points. Okay, so a very similar concept as such. So people are also seeing this formula now and their eyes glaze over. Please don't get worried about this. Just gives you some of the things how the guys would calculate the futures price. Obviously, this is more pertinent for big institutional a trader as such, or big institution. There's three things involved there: the deal date, the maturity or settlement date, and obviously interest rates. So don't worry about this formula so much. It's just how they would calculate it. So I know some of you might want to become more analytical and you want to know exactly what the futures price should be, and you're scared that the market makers might be putting the wool over your eyes. Don't worry, as the market is becoming more and more liquid as such. So here we go. Here's the example. We've got maturity date of 82 days to go. Spot at 820. Futures price. Sorry, we want to calculate the futures price. That's the South African interest rates, 5.95. There's US Treasury. So the idea is that we add the points in this situation, 0.1234 to the underlying interest rate. So that's what our futures price should be doing, trading at. Okay. So this is the process the guys will go through. Okay. So they should always be trading in tandem together. Unlike with, for example, the Aussie, sometimes the Aussie might be trading higher than the underlying the top 40 index, or might be trading at below it. So it might either be trading at a premium or to a discount. With single stock, with currency futures, by the way, it can never trade below. So it's always trading a bit above it, in the sense that there's no manipulation going on and things like that, and that's a Reserve Bank requirement. Okay. So sometimes you might find that for very short periods of time during the day, things can change. Currency markets can move, can be more or less volatile. So the spreads might widen, but remember the spots and the futures price, they should be moving up in tandem. Okay. So sometimes they might move away, but they come back together very, very quickly. Okay. So we use fair value as a guide, basically just to see if the market makers are pricing it fairly. But as I say, it's getting a big market now, and more and more people getting involved, and obviously market makers want the best price. They want to grab the market share. So you don't have to worry about that anymore. So here's our example again. The rand is trading at 8.46, and our forward points is just under 20.2 cents. You add the two together, so we get 8.4811. And you can see where the market's trading at. So we're right near the middle. So we're basically well priced. So you can see the market, it's to say roughly about 2 cents off the whole time. But that's how the market's trading at the moment. Let's get into more some examples, practical examples, before going on. As I say, you can either be a speculator or you can be a hedger. So let's talk about the first option we have here, where we talk about a normal speculative trade. So yeah, we've got a normal futures trade. This guy's a dollar bear. In other words, he wants to sell the bear. He feels that the current economic climate is becoming more positive, and he will start seeing more risk on. This is a term people use now, risk on and risk off, which reminds me of Karate Kid, wax on, wax off. So we're talking about a risk on environment. Basically, is where people shy away from safe haven assets like the US dollar, the Japanese yen, and the Swiss franc, and they move more into the more risky assets like the rand. Okay, so that's regarded as a risky asset because we are emerging market currency. Okay, safe market, a safe haven, obviously the developed markets. So he feels that the dollar is overvalued and should depreciate in the near future. So on day one, the spot, and you'll see in the next slide, we talk about, or in a few slides, we talk about the cash flow table. You'll see in more detail. The spot rate, the rand at the moment is trading at 8.20 to the dollar, and the future is trading at 8.32.34. Remember, this is including those what we call those forward points. Okay, so you'd sell in this situation. He decides to sell 100 contracts of the September contract at 8.32.34. Okay. So the margin requirement for each contract is $340 Rand per contract. Remember, this is always doubled, okay, or multiplied by 2. So in this situation, it's 680 Rand per contract. Okay. So obviously his margin is 68,000 Rand if you look at 100 contracts. Remember, it's very, very cheap. It's only 18 Rand per contract. So in this situation with 100 contracts, it would cost him 1,800 Rand. So remember, it's 18 Rand on the opening leg, 18 Rand on the closing leg. Okay. So in the meantime, also obviously your margin is earning interest at FX rates. Okay. So on day 4, in the next slide, you'll see the table in more detail. The Rand is pulled back now to 8 Rand, and the future is trading at 8.12 Rand. Okay. So he buys back. Remember, he sold the contract, and he buys back to close out the position. So he buys back at 8.12.34, and he makes a gross profit of 20,000 Rand. So his brokerage is 3,600. Remember, it's 18,000 Rand on the opening leg. Sorry, 1,800 Rand. And 1,800 Rand on the closing leg, 3,600 Rand. His net profit for those 4 days is 16,400 Rand. Okay. So his total capital outlay was his margin of 68,000 to make a profit of 20,000. So it's not too bad. 4 days made a 29% return, hence the attractiveness and the more and more people getting involved in currency futures. Okay, and that's not bad if you look at the Rand only weakening in this example by 2.4%. So a small movement again with the gearing, can be very profitable for you. Okay. Just understand also, by the way, those of you that are day traders are people that trade intraday and they don't carry a position overnight. Day traders, you're only paying on the one leg. In other words, that 18 Rand per trade, you can split it up. It's 9 Rand to open, 9 Rand to close. Okay, so it's obviously even more cheaper to trade intraday as a day trader. Okay, so here's that little table I was talking about. Going back to my example, it opens up, remember our initial margin, the 10 contracts at 340 times 2, 680 times 100 contracts. That's how we got at 68,000 Rand. There's my brokerage, the 10 contracts at 18 Rand per contract, or sorry, not 10 contracts, 100 contracts. These are the price traded, and so it goes on. Okay, mark to market at the end of the day, that was, remember the price has fallen back a bit. Remember, we want the price to fall. We want the price to get stronger. Because in this, remember, we're short the dollar. So in this situation, the difference between the two prices, in this situation, just under 7 cents, times 100 contracts, okay, 73 times by, as I say, the number of contracts, or times 1,000, yeah, we got 7,340 Rand. Less my brokerage on that day. On that day, I had 5,540 Rand going to my account, being deposited that night into my account as a profit. And so it goes on every day. Next day, the price drops even further. Okay, so we're trading at 8.15 now. So there's, again, a 1 cent movement, which is equivalent of 100 Rand times 1,000. So you've got 10,000 Rand coming the next day. And so it goes on. On day 3, however, the market got weaker. The Rand weekend from 8.15 to 8.23. Obviously, they went against me. The dollar got stronger. Remember, always have to think currency pairs. Either the dollar's getting stronger or the rand's getting weaker, or vice versa. So in this situation, that particular day, 8,000 Rand went out of my account. So if I didn't have the funds available, obviously I'll have a margin call, like with single stock futures. Okay. And on day 4, we decided to close out. And on that day, the Rand went from, oopsie, let's go back again. The Rand went from 8.23 to 8.12 again. We closed out. And on that particular day, 8,860 Rand into our account. So cumulative, if you had to add up every single day, less our 1 day loss, this is how we got that 20,000 Rand. That's our brokerage, that's 16,400 Rand I was mentioning just now. Okay. So when you guys get this presentation, just go through this table. This will make a lot more sense to you. Understand the process of market to market, understand the process of margin, how brokerage we calculate it, that kind of stuff. So it makes it a bit more simpler. One thing I've realized with currency futures is adding these numbers are very fast and being able to multiply it out. Most of the guys will go for, as long as it goes for 100 points, more than 100 points, that's the kind of things the guys are looking for. Remember, you need to cover your brokerage, your costs, which is, as I say, 4 pips. 4 times the 10 Rand is 40 bucks. So that's what the guys are looking for. Okay. So that's an example of a speculative trader. Let's talk about a hedge. So here's client B. He wants to send money abroad as part of his 4 million Rand offshore allowance, but he only decides to use half and only send 2 million offshore. So in other words, he wants to invest in some equities and property offshore. He opens up an offshore account with PSG and that kind of stuff, but he's also scared that the Rand's going to go against him. So at this point in time, the Rand is trading at 8.20 and he feels happy with that, but what happens if it weakens further? He's obviously going to get wiped out. So the problem here is that he feels that the Rand will weaken from its current levels and you'll lose some foreign currency, obviously, if you have to convert back. So, for example, his 2 million at 8.20 gets converted into dollars. The equivalent value will be just over $243,000. But now if the Rand has a devalue by, say, for example, to 10 Rand 20 as it has done now, you can see the same exposure will be much less. So he wants to hedge against that situation. So that's a solution, is to hedge the currency by using a currency future. And you want to lock in the current rate. And that's why we talk about using a currency futures as a hedge. You're locking in the current rate. So he goes and buys the US dollar contract. In other words, he's giving you the right to buy the US dollar and sell the Rand because he anticipates the Rand to get weaker. He wants to take advantage of the weaker Rand. Hence, he buys the US dollar and sells the Rand. So obviously they're getting at a specific rate and at a specific date. So on day one, he goes and buys 244 contracts at 832. Remember, the spot is at 12. This is where the futures market is trading right now. So his margin, remember, again, in this situation, 340 Rand rather, times 2, times my 244 contracts. That's how we got this number here. Okay. So in month one, he decides, oh, the market has gone against him as expected. It has weakened. So he loses 30 cents on his exposure offshore. But on the other hand, okay, his future is made 30 Rand. So what he loses on the one side, he makes up on the other side. So basically he breaks even. That's what we call a hedge. Okay. So he buys back 832 to close out the differences, and that's how we translate into a profit of 65,000 Rand. Okay, you'll see on the slide just now, again, the cash flow table goes into more detail. So here's that initial margin we were talking about just now. We saw how it was calculated. The 340 Rand times 2 times my 244 contracts. That's how we get that initial margin. Okay. So there's my brokerage. Remember, it's at 18 Rand per contract times 244 contracts. And obviously, that's the price of traded at. So on a daily basis, you can see how the funds moving out in and out your account. Okay, remember, it's mark to market. So funds get deposited into your account if the market's in your favor, and money gets taken out of your account on the same day if the market goes against you. So if I had to add up all these different contracts, this is how I make all those different cash flows every day. That's how I make that 65,000 Rand profit I was talking about. So again, remember, go through this, highlight it when you get this presentation, and to make more sense to you guys. Okay. Let's move on. So what are the benefits of currency futures, trading currency futures? Obviously, as more and more people get involved, and there's more growth in this product, you see the spreads will get tighter. The spreads is the difference between the buyers and sellers, and obviously the costs are very, very attractive. Remember, they're cheap. They only cost you 18 Rand. As a day trader, it's even cheaper. Remember, it's 18 Rand on the opening leg and 18 Rand on the closing leg. As a day trader, you split that. 9 Rand on the opening leg, 9 Rand on the closing leg per contract. So very transparent pricing, which I'll show you a slide just now. We talk about our watch list. Remember, these market makers are making the prices all the time. So that's posted real time on the central order book so everybody can see it. So it's transparent. And that's also the attractiveness of this now. There's no more people hiding things away. It's all transparent. Remember, it's secure. It's guaranteed by the JSE. But just remember, these things are geared products, so you don't need a lot of cash to cover the full value. But obviously, remember, being a geared product, there's risk involved. Just always remember variation margin and that kind of stuff. Top up. You still get a margin call like we do with single stock futures. If you don't have the funds available, you need to top up by 3, 4 o'clock in the afternoon. If not, we close out your positions to cover the losses. Remember, it's there we use that margin as a collateral to protect you and PSG. Okay. So remember, we can use currency futures to hedge, be it importers or exporters, be it a long-term equity investor, whatever the case might be. You want to do the opposite, you anticipate the market to fall, use currency futures for that reason. Okay. So remember, the market liquidity is coming from the market makers, the big banks and things like that. So you're trading very, very close to spot and things like that. Okay. Mark to market, remember, it's a daily process to help you adjust your portfolio accordingly, profits and losses. And remember, these things are always settled in Rand terms, and it's always settled in cash. Okay. So there are a lot of benefits. Obviously, those are the pros. What about the cons? What about the risks? So there are risks involved. Again, I'm stressing it's a geared product. It's not for everyone. You should always consider your circumstances and your financial resources if you look at currency futures. So as with any geared product, obviously you can make large profits and from large profits from a small outlay, but the opposite also occurs. A market can move against you and can also occur large losses. Okay. So remember, risks, manage risk. So if you want to trade currency futures, you need 3 things. You need a high appetite for risk. You need time to be watching the market. And obviously next month's webinar, when I go into more detail, I'll be talking more about these other factors you have to be looking at. Next slide, I do touch on it as such. You need some expert knowledge. You need to understand what's moving the market, what the factors are and things like that. And obviously all the other associated trading processes. Being a currency future, most people will be trading it, and most of the time we'll be using technical analysis. That's the tool we're using most of the time. We can touch on it a bit later. So as I say, it's not for everyone, but something to consider. So each currency trade, futures trade, is unique. Obviously, in that time and space, something might be happening, be it geopolitically, be it economically. So there's always associated risk with it. There's volatility, there's exchange rate risk, there's credit risk, monetary risk. That's a big thing right now. Obviously, the central banks, especially the Fed, has been talking about tapering off their stimulus of the market, and that has rocked the boat a bit. So these are just some of the factors involved. Obviously, interest rate risks. We talk about inflation going up soon, and obviously inflation goes up, interest rates got a good chance of going up also. So all these things you have to be aware of, and you need to learn to how to evaluate these various variables and take into consideration. Okay. So remember, not every trade will be successful. You'll have winners and losers. Obviously, the idea is that as long as your winners are bigger than your losers, that's what you're looking for at the end of the day. You will be successful down the line. So always have a target price or a profit target in mind, and be strict and be diligent. And that's where we talk about discipline. So do not be emotional about your trades. Trade on fundamentals. I use fundamentals and technicals, and I suggest you have the same idea. Is have a strategy in place, be it logical or common sense, but have some strategy in place. Don't just go by the seat of your pants and thumb sucking. Okay. There'll be days when you'll be tempted to write out a trade where you think, oh, this is going through the roof, and lo and behold, before you know it, that your profit becomes a loss. So have these things in place, have it documented, have a trading plan, a detailed trading plan, and things like that. And I've mentioned this in previous webinars, how to do it. But the idea is that you plan the trade and trade the plan. Okay. So what are the risks? Obviously, if you're not doing your homework, you don't understand the product, that's obviously against you, first of all. So the idea of this presentation, this webinar, is to give you a bit more background information, be it what we call product knowledge. But the best way to do always is to start small. So where do you start? You want to start with PSG. PSG offers you the platform. We're well known, we're independent, we're a respected financial service provider. We've been voted Stockbroker of the Year for 2 years in a row now. But also, as I say, remember, being a standardized or a regulated product, obviously PSG has to be regulated. We're regulated by the FSB as well as the JSE. So our PSG currency traders are highly skilled, but they also have to be approved by the JSE, by the JSE and SAFEX and such. So we do offer a competitive brokerage at 18 Rand a contract. Remember, that includes clearing and settlement fees. Unlike equity trading, we have a monthly admin fee. There's no monthly admin fee. Okay. And our business offers, remember, are made by the market makers. And so you're getting the best price as such. So PSG, we're not market makers ourselves. We trade through be it RMB or ABSA or Standard Bank. They are making the market. Okay, so PSG doesn't add anything else onto that price. Okay, so just be aware of that kind of stuff. When it comes to trading currency futures, the main tool you need is technical analysis. Be it some charting program. Now I use, for example, in this situation, I use Metastock. What I like about Metastock is that I can invert the scaling. Just gives me a bit of perspective where the market's going. And I always like to write text on the screen and things like that. So normal technical analysis applies to currency futures. Here we're looking at the rand relative to the dollar. So we're using support and resistance. I use moving averages. So we can see in this situation here, it's trading below its 200-day moving average. Remember, I've inverted the scale. So if it's trading below its 200-day moving average, it means it's bearish. Okay, it should be more on the short side, or you should be selling more. Should be selling the rand and buying the dollar. Okay. This is also below its 50-day moving average. It's trading below this resistance trend line. That's in the long-term trend. Sideways, that's medium-term. And obviously, intraday, we're still looking at our candlesticks and things like that. So we're going through a bit of a consolidation period. Consolidation, with a nice little range between 10 Rand and 30. Oops, let me go back again. Between 10 Rand 30 and roughly about, say, 10 Rand 80, 85. So a nice little range you can be trading that if you want to do range trading. I like to do breakout trading. I like to do a breakout. If there's a breakout above that resistance trend line, in other words, get stronger, I want to take advantage of that. That's the kind of strategy I like to use. So again, going back to the trading strategy, you need to decide, am I going to do range trading, am I going to do breakout trading, what am I going to use? So I'm still using technical analysis like stochastic and RSI. When it's on top of the screen, on top of the range, here above, on stochastic above 80, we talk about overbought. You can see in that same time when it's overbought, the Rand is undervalued, in other words, weak. And then when it pulls back, obviously that's where it happens here, where it's oversold, it pulls back, and the Rand gets strong again. So we talk about overvalued and overvalued, or talk about a weak or strong currency. This helps you make a decision, which one you're going to trade as such. Okay. So there's one very important tool to use is charting. This I'm using Verastock in this situation. Other things you want to use on our website, those of you, once you've opened a currency futures account and it's active and you've got funds in it, you'll have a currency futures watch list. Okay, there you'll see live streaming of prices of 8 currency pairs. Okay, some of them, there's 2 of them we don't get live streaming at this point in time, but it shows you the bids and offers, and this is live between the buyers and sellers. So it gives you the last price, and you'll see in the next slide, I show you a bit of a screen dump, what it looks like. I find it useful in the sense, remember, it's live streaming of those prices. Okay, so, and obviously there's a link from there. You can straight to the order book and things like that. Once you've got a currency futures account open, we talk about placing an order. You go to new order tab, and here you can select from 10 different currency pairs. Gives you the last, the price and things like that, the bids and offers, the margin requirement required and things like that. Once you've opened up a position, you go to your portfolio or your holdings, and this shows you all your open positions and things like that in various currencies and things like that. Okay, so you'll see in the next slides what I'm talking about. But obviously to help our clients also, we do write a daily Rand report. This is a very, very useful tool. Gives you the market research, market commentary, our traders' views and things like that. And also highlight some trade ideas and things like that. So this helps you to make more informed, educated investment as such decisions. Okay, so here we go. Once you've selected or opened up a futures account, you'll select watch list, and one of the tabs there will be currency futures. Okay, what I find useful, you click this little button here called Open Live Streaming, and this opens up a separate little window. And from there, I can anchor it all different places, or I can resize it, and I can see the different currency pairs. The three that do trade a lot, obviously, is the dollar against the Rand, the pound against the Rand, and the euro against the Rand. Those are the 3 most popular, with the most positions opened by the traders as such. Okay, so a very useful tool to have. And obviously, going forward, and this is something I'd like to ask you guys, listen to this webinar. Please send us any suggestions you might have, how we can improve it, improve the watch list, improve the trading platform. You'll see on the next slide, we talk about if you click on new order, okay, this is what it looks like. So I've selected this drop down arrow key. I'm going to go trade some euros now. One thing that is missing, and yes, we're going to have the same look and feel like we have equities and have CFDs and single stock futures. One thing we are aware of, and a lot of people are asking for it, we do not have a stop loss facility or price alert facility as yet. So yes, it is a risk factor, but obviously some of you that are trading currency futures either be day trading or be watching very closely, but some of you might be using more the technicals and watching it very closely that side. But you'll see on this situation here, between the bids and offers are very, very narrow. Yeah, exactly, just under 1 cent, or just over 1 cent rather. So you see those tight spreads. So what you do is you want to go buy. So in other words, remember, I'm buying the euro and I'm selling the Rand. How many contracts? It tells me my minimum contract here is 990 Rand. Okay. So remember, that's times 2. So it's just over 1,800 Rand that you need. to open up a trade on the euro as such. This is what it looks like as an example of a holdings in this situation we're holding 53 contracts on the US dollar. So he's long of the dollar. In this situation, this was this morning. You might have had a margin call. Okay, so that's what it looks like, and obviously you're going to have against the dollar, against the euro, against the pound, all these different currencies, and you have a view. So you'll be trading it. So you're on a spread and have a few different positions open, riding a few horses at the same time. What you lose in the swings, make up in the roundabouts. That kind of trade. Okay. So where would I find the RAND report, by the way? Remember, the thing will get emailed to you, but also you'll find it on our web page. If you click on resources on the next page, click on news, and then you'll find a section here under news. There's various categories. You look for RAND report. This was yesterday's one. You click on that link, and it opens up. Now, there's three parts to the RAND report. Obviously, the news of the day, all the different economic factors, what's moving the market and things like that. But also what I find useful is the events, the economic calendar. Obviously, Japan, if I was trading the yen, I need to know what's going to affect the yen. Will it be the producer price inflation? Will it be worse than expected? If it's worse than expected, people feel bearish. They'll sell the yen, and obviously the rand will strengthen, that kind of stuff. So it's just having a view very quickly on that kind of stuff. So you can see also what they forecast. So obviously in this situation, it was worse than expected. Consumer price inflation was increasing. What's the implication of that? Okay, so you need to have that kind of view on the market. And the technicals will show you the trend anyway. And also what I find useful, our traders will put out a view of the day. This is on the dollar against the rand. And they'll have a bit of a spiel here. As I say, we're going through a consolidation period. The market's moving sideways. What's useful is you click on that little link to enlarge the graph. And then they highlight support and resistance levels for you, or take profit levels and stop loss levels. Okay. So these are tools you'll use in making your decisions. Okay. So people, how do you get started? What I suggest you guys do is go read the stuff on our website. You can click on this little link and take you through to the website and give you more information of the stuff I've talking about. But also you can go open up a single stock futures account and a currency account, and that's the option I suggest you guys do go for. Open up both. When you deposit margin, once the account is opened, you'll have a account number. A currency account number always have 3 letters and 3 numbers. Okay, like a single stock future. You deposit money into your account and you use the currency account number as a reference. Once the funds have been cleared, you can start trading straight away. Very easy. It takes you 2 days and you're up and running. Okay. So quickly, quick summary before we head into questions and things like that. There are a lot of benefits. Obviously, there are risks also, but I believe that the pros outweigh the cons by far. Okay. So, as I mentioned, there will be another webinar coming up soon. In August, the second part of August, I'll be highlighting Currency Futures Part 2, a bit more fundamentals, what we look at, more of the technicals regarding currency futures. So this is more for the intermediate to advanced trader, whereas this session was more the novice. Okay. So end of the month, 2 weeks' time, I've got a session on technical analysis. Our very first session on Elliott wave and cycle analysis and Gann theory and all that kind of stuff. That's going to be interesting. I know some of you have been asking about it, and some of you might be using the obscure cycle analysis and that kind of stuff. So we'll be discussing that. Some of you might have missed our previous session on exchange-traded funds or exchange-traded products. So we're having another session. This will be our last session for the year covering ETPs. As I mentioned, again, August, Currency Futures, Part 2. And then those of you that just started new to the market, basic introduction to the share market, what's the share market, and things like that. Technical analysis, basic introduction to technical analysis, and things like that. Equity derivatives, single stocks, CFDs, Aussie trading. So it goes on. So we'll have a session on fundamentals. We'll have another session. Those are very popular Japanese candlesticks. It's the first time we ever had 100 people, full 100% attendance on Japanese candlesticks. A lot of people have asked for a review again or repeat. So we'll be doing that in November. And then going back to fundamental analysis, more the investment approach, value and growth and dividend approach. And then again, we'll be touching on technical analysis and looking at the point figure charts. So those are the upcoming webinars. I haven't put this up on the website yet, so you won't be able to book straight away, but should be able by tonight to have all these up. But please go and book. These things are full up fast. First come, first serve. Okay. And then we have our traders forums. This is where we go around the country. You can actually meet us. On the 30th of July, I'm here in Joburg. We'll be discussing the market in general. Obviously, a bit of training, usually be on equity derivatives or opportunities in the market and that kind of stuff. Next month, I'm in August. Next month, August, I'm in Cape Town. In September, I'll be in Durban. And then back to Pretoria in October, Joburg in November. Our last one for the year, I hope to have in Cape Town. So that's what's upcoming for the next year, next few months. So please go ahead and book. So in conclusion, guys, before we handle any questions, please go through this information. There's information on the website. You're beginning this presentation as well as the recording. Please review it. I put up a lot of questions for you, and I encourage that. I want you to guys send through your questions. Email me any questions. On the next slide, you'll see my contact details. But this is how we will learn. The more I teach, the more I learn, and that kind of stuff. So please go and book our upcoming webinars and Traders Forum. And for those of you that haven't done it as yet, go and open up a currency futures today. It doesn't cost you anything. So once you've done that, obviously the FICA process and all that kind of stuff, you can start trading. So guys, I hope you've enjoyed the session. I've gone through it very quickly to be able to handle some questions. There's a few minutes left. So let me just quickly handle that. Here's my contact details, by the way. Those of you that want more, I might have some questions. Sean VDB at phd.co.za. There's my direct phone number, 011-996-5254. Alternatively, you can also get us on the toll-free number, 0860-774-774. You can speak to myself. I'm on the trading desk with Pierre and Tian. Any questions you might have, be it currency futures or other derivatives, single stock futures, CFDs. Okay, guys, let's see if I can handle any of these questions. If I can't answer it now, I'll be getting back to you guys. Do trades, this is from Neil, do trades of the big fund managers and institutions have impact on the value of the rand going forward? Sorry, I've got people drilling here next to me now. Just bear with me. No, remember the main thing is that the spot and the futures price have to move in tandem. The Reserve Bank requirement is that there must be no manipulation of the futures price. So to answer your question, remember that they'll sell in the spot market and buy in the futures market, whatever the case might be. So there's no manipulation going on, to answer your question, Neil. Okay. Can I get onto webcam? This is a question from Sorrel. I'm not 100% sure of your question there. What do you mean by webcam? No, if I remember rightly, webcam is more video. This is more one way. So let me just extend this out. You can see what other questions. Marius, we wish. Obviously, there must be some statement I made sometime. Marius, is there a platform for dummy trading? Isaac, not at this point in time. We do have obviously a single stock futures simulator for Aussie and all meat trading. I think the best thing to do is just open up an Excel spreadsheet. I think that in my example now with the cash flow, give you a better idea how to create maybe a dummy portfolio using Excel spreadsheet. What if I'd done this? What would have happened? That's one process. But obviously, being an Excel spreadsheet, there's no motions involved. So the best thing to do is to start small. Go start with one contract. And then from there, as you get more contracts, more confidence, increase the contract size and things like that. That's, I think the best way to answer your question is do it Excel first and then go on to starting small. Okay. Let me see if there's any other questions coming through. No, as I say, just remember this presentation will be sent through to you guys, the PowerPoint presentation as well as the recording. Please, 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 I ask you to go through it. Remember, you guys are privileged. To those of you who are on the on this webinar, you guys get it. People that booked and didn't actually participate do not get it. I'm very strict of strict on that requirement. So I don't send it to everybody. So please use it as a learning tool. And any questions you have, email, please send it through to us. You know, and any suggestions you have on the trading platform, or what else you'd like to see on the website or other research tools, please send it through to us. We are really would like to have more comment on how we can improve your experience. Bottom line, if you're making money, it's a win-win situation and everybody's happy. Okay. So I don't see any more questions coming through. Thank you very much, Craig. It's a pleasure. I hope you've enjoyed it. Okay. Guys, I hope you've enjoyed it. Remember, this presentation will be available for you guys. And again, as I say, please send me those emails you might have. Thanks a lot for your participation. Thanks for attending, and enjoy the rest of your day. Thanks. Bye.